Hey guys, Toby Mathis here, and today we're going to talk about Airbnb and whether the decline in Airbnb is going to cause a housing crash. So, this whole thing started because a gentleman posted numbers that he discerned from all the rooms, a service that basically tracks the short term housing market. And he found these massive revenue decreases across top 10 cities, and they were comparing year over year data. And for example, I'm just going to use Phoenix here. Phoenix was down 47.2% year over year in the revenue per active listing. And so I'm going to dive into that data. I'm going to dive into the AirDNA data and Airbnb data, and then and housing data historically and housing data as we're sitting right now so that we can make an intelligent decision. So we're just going to dive right on in. All right. So first off, it was Nick Gurley who posted something on Twitter about the Airbnb collapse, and he posted the Airbnb collapse is real. Revenues are down 50% in cities like Phoenix and Austin. And I just want to point out something. Revenue per active listing might be down, but revenue statistically is way up for Airbnb. In fact, if you look at Airbnb, and I just want to grab some of the revenue numbers, the last 3 years, they're up 70%. So you could say what you want. The short-term rental market isn't collapsing, but if I compare, again, I'll use Phoenix as an example since it was one of the top cities, and I just happened to grab it. It was random, but the number of short-term rentals right now is 21,000. It was 5,000 in 2017. So we just have supply and demand, and the question is the supply and demand ratio? Is there so much supply that the demand is collapsing, and that as a result, people are going to have to sell? And I'll just be flat out and just answer this for you. The answer is a resounding no. But if you look at Airbnb year over year and where it's at, not only is the revenue up, but they are talking about active listing as potentially being flat and backing off, because after the pandemic we had this huge surge and everybody and their mother was jumping into that marketplace, and Airbnb saw explosive growth on our side, the investor side, buying these units. And let me just give you some of the numbers. For example, let's just have some fun here. In Phoenix, Arizona, the revenue per active listing in May 2022, and they take a 3-month average, was $5,569. Now, keep in mind, that's per active listing. These aren't all single family homes. These are condos, these are rooms, these are partial, like there's rooms available in a unit. So example, if you own a house and you say, hey, I'm going to rent my garage out, or I'm going to rent out a room to people periodically. When you look at that number, that's an extraordinarily high number. And what it was for 2023 was $2,939. And it's down 47%. So, it's going to crash. And because that's crashing, Airbnbers are going to dump their houses onto the market, and it's going to have such a dramatic impact that the market's going to crash. And that's just, it's devoid of logic, because it's just, there's no way to get there based off the numbers as we see it. And what are the numbers? Well, right now we have some of the least numbers of active listings that we've ever had in the United States. Like, it's definitely in the last 10 years. We're at like 600,000 units. We typically sell in the United States somewhere in the 6 to 7 million range. Even in 2023, with interest rates being high, they're still saying in the 5 million range. So what could possibly cause there to be enough listings that it would actually impact the housing market? And the answer is going to be millions of listings in order to adjust that number, because we don't have enough inventory as it is. We just have a really low number of inventory. In other words, if you said, hey, how many months of housing inventory would we have to have? You'd have to have about 2.5 to 3 million units, something similar on par to what we saw in 2010. What do we have? 600,000 units. That's going to last you about a month and a half. Yeah, we just don't have a lot of inventory. And let's say we dumped every single short-term rental. What would that number be? Well, there's an estimated 1.2 million short-term rentals in the United States. So if every one of those owners, and keep in mind, About a third of those are actually single family homes where they rent the whole thing. So let's just say a third of that amount dumped in one day. They all decided, I'm out of the short term rental market and I just dump it all. It would be absorbed like that. Would it have an impact on pricing? Yeah, minimal. But we're talking like, even if you took every short term rental and just assumed they were all 100% single families, which they're not. But even if you assume the worst case scenario, every single one of those is a single family home, and we listed them all, you would have it would be absorbed in a matter of a couple months. Is it going to have a major impact? It's not going to cause a crash. I'm sorry. For those of you guys who love that fear porn, it's not going to happen. Now, what is happening? You are seeing the adjustment of supply and demand. You had low supply, tons of demand, spiking prices, but has it actually affected Airbnb as a whole? No, the revenue's up, but it's flat now. And so even Airbnb is saying that it expects 2023 to be a slight decline. I think it was 3% and flat. So it's not like, hey, there was this huge pent up demand and they're meeting it. So the way I liken this is if you were taking a jetliner, you take your 777 and you go up to 36,000 feet and you're leveling out. You might go down to 35,000 feet. You might stay up at 36, maybe start to go a little bit higher, but what you're not is dropping out of the sky. That's a crash. So the plane is not coming in, like it's up at cruising altitude and staying right there. It's not going to change anything. Now, let's go back and let's give benefit of the doubt to Mr. Gurley's post and that these numbers are somehow accurate. Let's actually check those numbers. And we can actually go and look at a real-time data purveyor, AirDNA, and they track the same thing. And can we duplicate these numbers? So let's say, hey, there's this massive decrease. Can we get anybody else to verify it, or are you going off of one site and their data? And when you look at AirDNA, the number was not even close. In fact, I have, I think it was Jamie Lang, and I'll provide you this actual tweet. A viral tweet about short-term rental data. Let's get some facts straight. There is no collapse in revenue per active lead. They call it RevPal. Is it down in 23? Yes, it is down. Is it down 40%? No. I pulled the numbers, and what do we find? The average is, what is it, about 3%. So it is not a collapse. Then you have Mr. Gurley putting up a map like this, where it says, hey, let's just take a look at homes for sale, Airbnb listings. Here they are. Here's all these listings, and here's the homes for sale. And he says that is further proof that there's too many Airbnbs compared to the number of homes per sale. And I would say, no, the average homes per sale is really, really low in the United States. In fact, when you look at, and I'll give you guys this chart, when you look at that number, it's way down here, right? There's just no homes for sale. Why would you sell a house with a mortgage on it that's a 3% mortgage right now? You wouldn't, because when you go to replace that home, let's say you go to buy another house, you're going to be paying 6% or 7%. So you don't want to do that. So there's not a lot of people that are willing to sell. Would a decline cause the Airbnbers to sell? And I would say, absolutely not, because when you still look at the numbers, because what the numbers said, and I'll just grab his numbers again for Phoenix, for example, they went from 5,500 revenue per active listing to close to 3,000, 29.39. What is the average price for a rental home in that same city? So if we didn't Airbnb it, what if we just had an investment property? And what if we got caught up in this and we projected, oh man, we're going to make a ton of money. We're going to make 4,000, 5,000 a listing. And now it's actually going to be 3,000 per listing. So let's just say you said, I'm out of this Airbnb game. I don't want to deal with the cleaning. I don't want to deal with hosts. I don't want to deal with furnishing. I just want to rent that house out. What would you get? You might be shocked. The average price, let's just say the average price was right around $2,000 a month, the average price per rental, according to Zillow. So you're making 50% more than you would if I just rented it out by doing it on Airbnb. And again, keep in mind that we're comparing apples to oranges in many cases, because a lot of the Airbnbs are just rooms. These aren't even full properties, but if we're just looking at full properties, the numbers would even be more stark. You're not getting out of Airbnb simply because you've seen that type of drop, because it shot up and now you're seeing it correct. It's always supply and demand. When there wasn't enough supply, the price went up. It's like wood went up nuts, right? Shipping was just gonzo for a while, and then it normalized once it started to, hey, the demand was being met, the price goes down. And that's what you're seeing in a lot of these cities. It's just you had a rush going on, and then you saw now that the more and more people, and again, I used the one example, we literally quadrupled the number of properties. We went from 5,000 active units to 21,000 active units in Phoenix. And what did it do? It brought the revenue down in line for per active listing to make it, still blows rentals out of the water, but is it 5,500 now? Now, it did sink that 47%, but that's also one city. And so when you look at the top 10 cities where they're declining, it ranges from Tennessee, Seaverville, and Phoenix being at this 47, and Austin being at 46, down to Orlando being at 34%. I think those are the top 15 cities for these declines. You're not seeing it as an average. Definitely not seeing it as an average. In fact, my dollars would tell me that we're pretty much flat, if not seeing increases. And you saw revenue increases with Airbnb over the last year, 2 years, regardless. So even with, we're looking at a recession, we have high interest rates, we're not seeing a decline. You're seeing a decline compared to what it was last year at the same time in some cities, not across the board. So it's like all things. So again, just keep in mind that of the total inventory in the United States of all homes, short-term rentals would account for less than 1% of those. When we look at all the homes, we have about 140 million units, and we got about a million to 1.2, depending on whose data you look at, for short-term rentals. And assuming they were all short-term or single-family homes and not condos and rooms and this, that, and the other, but assuming, or ADUs, there's a variety of things that people rent out, the room over the garage. Assuming that they were all actual homes, you would still be affecting less than 1% of the total inventory. That does not, my friends, create a crash at all. This is just more fear porn. And by the way, how are we sitting right now in 2023, midway through? We're on pace for 130,000 foreclosures this year, right? And just to put that in perspective, in 2010, I think we had 2.9, right? If you want to see a housing crash, this isn't it. We still have tons of people with with equity in their properties. We are seeing the interest rates, the increased interest rates definitely have an impact. Like what it's causing is low supply, which means there's going to be pent up demand at some point. And we're going to have, something's going to have to give. They're either going to break the economy, cause a recession, and we're going to see the pricing get adjusted that way, or you're going to see them start to lower interest rates again and people start to loosen up and actually go sell properties again. But what you're not going to see is this massive crash because of Airbnb. That's just absolutely false. Everything I can see says, no, that is not going to be happening. And again, when you look at AirDNA, they can't even back up the data that was used from all the rooms. But even if you assumed gratuitously that all the rooms was absolutely accurate, it still does not even come close to creating a situation where you're going to have a housing collapse because of Airbnb. Not even close. We're talking about a fraction of a percent of the total available properties, and we're talking about some of our lowest inventory levels in our history, at least over the last 10 years for sure, maybe even 20. I'd have to go back, but we're seeing really, really low inventory levels, and it would be absorbed so quickly, even if people decided to get out of the Airbnb. Or they could just make it into a rental and do it that way. There's so many other options. Hey, I just quit renting my ADU. Doesn't mean I'm going to sell my house. Or, hey, I'm going to quit renting this room. It's just not worth it. All that's going to do is means that there's going to be more demand, less supply. and cause the prices to go back up anyway. Then you'll probably start renting your room out again. So there might just be that pause in the market. What it doesn't mean is everybody's going to dump their properties. And even if they did, just doing that wouldn't in of itself cause a major decline in the housing market. It's definitely not going to cause a crash. Hey, if you like this type of information, please share it. I always find that facts don't care about our feelings and that they'll usually give us the answer rather than somebody's opinion. So if you like these types of facts, please share it, please like. And if you don't agree, or if you do agree, leave me comments, because I read your comments and it helps me decide whether videos to jump into and what's important to you guys. Thanks again.